Hey traders, welcome to the daily Pro Room macro video. It is 28th of September. Let's get started. All right, I'm going to take a look at what happened today in the markets. We had a very explosive day to the upside. I'm going to unlock this video from the Pro Room with YouTube as well, so people can see this. And I have a few interesting things to cover, but we had a pretty bullish day up here. You can see everything was kind of green and a pretty nice reversal after extreme oversold conditions. Everything started about 10 hours ago. It was about 6 o'clock, I think, Chicago time here, Central Time, when the Bank of England started to put a series of reports out there on the wire saying that they will carry out temporary purchases of long-dated UK government bonds starting from the 28th of September. Bank of England, the purpose of these purchases will be to restore orderly market conditions. Bank of England, the purchases will be carried out on whatever scales is necessary to effect this outcome. Bank of England stands ready to restore market functioning and reduce any risks from contagion to credit conditions for UK household and businesses. Bank of England Financial Policy Committee noted the risks to UK financial stability from dysfunction in the gilt market. These purchases will be strictly time limited. So the series of reports came early this morning, just as the market was acting very, very bearish. The market has been in a pretty bearish and stressed downtrend for the past 5-6 days. And a bunch of these indicators kind of reached oversold conditions. You could kind of, you could smell the fear in the air starting last night. It got to me. I got a series of comments out into the Pro Room, and I closed some of my position. I said, I think we're running the risk of a complete breakdown. And, you might take this as a signal to the bullish side because, I'm starting to kind of get a little bit of a fear in here that Bitcoin is going to break down. I'm trying to kind of get out of my bond position long, and, the dollar looks like it's relentless. And, kind of jokingly, I said, you might take this as a bullish signal because I think, might work. So, who knows? I woke up this morning and it was about 4 o'clock my time. I checked the markets. I'm like, yeah, and these things are smelling pretty bad. And then, a couple of hours later, we've gotten a report from the Bank of England. Then the market reacted a little bit bullish. Then they turned back down just slightly, and then it was kind of a full rally on from there on. So basically, what happened? Bank of England here was in line with all the other central banks in the world, that they will continue to reduce, their balance sheet, right? And just start that quantitative tightening and sell bonds and increase interest rates. They have high inflation, just like, the rest of the world. They were on a path to monetary tightening, right? So when, they had some fiscal decisions here that were, not very well welcomed by the market. The pound sold off, I don't know, maybe 10% in the course of a couple of days in there. So it was a pretty bad sell-off. You almost got to parity, 103, 104 overnight a few nights back. And their UK gilts, I think, went and passed 5% or 6%. And, they started to feel some dislocations in the markets. I was talking with the members, during this week about, the possibility of interventions and the Fed maybe calling some of the central banks and tell them to, try to make sure that they're stable. And I'm pretty sure that some of these conversations happen. I don't have evidence for it, obviously, but I think that Jay Powell probably reached out and in a conversation with with Bank of England governors and some of the rest. I think they were talking these points through. So, as a consequence, right, they just said, no, we're actually gonna start buying bonds in here for a limited time. And this actually put a floor underneath the market, and it started to push higher. The 10-year yields on the US market started to sell off, the 30-year yields, the 2-year yield, and everything else kind of started to kind of come into place with a big sell-off in the dollar, a big rally in equity. So pretty much a big green on day, And truthfully, this came obviously at a time when the markets were very, very scared and very oversold. And any piece of good news on this market, it just created a big rubber band snapback to the upside. And the question now remains, is this going to be enough? to kind of start to correct a little bit higher? Is this going to be faded by the market by tomorrow or in the next few days? Maybe more news are going to come in. If it's the Fed going to say something that's going to put the markets back on a bearish path, who knows? But it did feel like it was almost like a kind of a major capitulation for the past 2-3 days in here, with a huge drop in bonds and an extreme rise in yields from the 2-year to 10 to the 30s on the U.S. markets, followed by an extreme rally in the dollar. And it felt like you're at the moment of a tipping point, and you guys could see those comments that I made on Twitter as well. I mean, if you go up here, you can kind of follow through kind of what I'm kind of saying in here. So I mean, I put this about 10 hours ago. Would the markets fade this or take it as a sign of more to come from the other central banks? One of the commentaries that I put into our pro room in here, I said, very choppy waters this morning with Bank of England announcing long-term bond purchases to provide liquidity and stabilize markets. This was a note that I made at about 7:02 a.m. Bullish initial reaction from across risk assets, which currently faded, even though is specific to the UK and their fiscal issues. These actions are a warning bell across other countries of the risks being run with such an aggressive tightening monetary policy. The odds of only a 50 basis points hike in November have greatly increased from 75 prior. The dollar is at multi-year highs and the risk of further market dislocations continue. We're very oversold in the equity space with many breadth and sentiment indicators at extreme levels. Combining this with supportive action from BOE, it could lead to a larger squeeze higher in risk. We're witnessing a real-time major macro plays in an extremely volatile environment. And then I follow through with more commentary down with Bitcoin, with the dollar selling off, and some comments from the Bitcoin Pro as well. So, we were, and also on Twitter, we were talking about, what's going on with the dollar and how, how come it's so overextended. I mean, I've been talking on the bearish note for a couple of weeks now on the dollar that we're reaching extreme levels in here. Obviously, it's a tough task to kind of try to pinpoint exactly a top in here, but you could see that it's a large upside, maybe fifth wave, and it's getting into very extended levels. So I'm gonna continue to say this, just like I said, the energy trade is over a while back, which was about a couple of months ago or a month ago. I think the long dollar trade is pretty much over as well, and today's price action I think confirms that, and I think we're going to continue to sell off in the dollar. So anyway, let's kind of go back and see what happened in the market. So Dow Jones went up about 1.9%, almost 2%. You can see straight from the out. Just a full-on buying. I think we had a pretty good volume as well. Nasdaq more than 2%, small caps 2.7, mid caps 2.7. So a big drop in VIX from high 34, right? We were looking 34, 36 as a barrier to the upside, and moments where you can start to kind of start to sell the VIX and start to buy stocks. We're kind of back to 30. So they killed the volatility today pretty much, and a lot of that probably premium just kind of melted away. You could see energy was on the first place with 4.4% because you had an increase in oil today. Then some of the beaten down sectors like XLC, XLY were towards the front of the pack, with XLK I think pulled down by Apple was up only about 1%. So a pretty strong day. I think even gold liked it. You could see bonds in here, just a complete meltdown in the 30-year treasuries, in the 30-year yield. So from 3.84 down to 3.68 right now, 10-year, which reached more about 4% or 4.01, I think was the high back in there, and it pushed lower to what did we close? 3.705 in there, and dollar with a 1 and 1.25% sell-off in here on the UUP commodities. Had a pretty good rally in there in oil. In gold was a pretty interesting performer today, and I think it's finally that the gold can, if gold gets a whiff of a continuous let's say reaction from the central banks, that they're willing to kind of stop, and they're willing to maybe support economies that apparently could be troubled or markets that can be dislocating, then gold is going to continue to rally. So pay attention. That could be a very good trade on the board, even though you're below support in gold. If you're able to kind of climb back above it, I think there could be some interesting opportunities in there. But again, I don't want to get too ahead of myself, too ahead of the skis in here, because these can quickly reverse, and we got to continue to look for signs of bottoming on any more comments, let's say, from central banks looking forward. Crypto, again, had a pretty good day today. Bitcoin was pretty depressed last night. They were trying to break below 18.6 in here, but today we had a pretty good rally. I would have thought it was going to be a little bit more than what we've gotten, maybe even more bullish. So it was pretty controlled, I would say, the buying from the lows. We'll continue to watch it. I'll make a Bitcoin video after this one for the pro room in there. So the rest of them were rallying, but not as aggressive as the equity markets would kind of have you believe. I'm going to take a look at a couple of counts as well, but before I do that, I wanted to kind of show you really quickly what's going on in the equity. So the highest were the micro caps. So this was a huge risk on day, right? When you see micro caps being up 3.6% on the day, you know that the money went into anything that they could find that was cheap and it was beat down. So that's micro caps. Then you got Russell 2K, rallying 3.1. So this I'm kind of putting them in the RSI strength or order, right? From the strongest to the weakest. You could see in all of them the RSI is just barely coming back from 30. But you could see in your NASDAQ 100, mid caps, small caps, Russell 3K, Vanguard, total market. And then towards the end, you have utilities, right? Which is a little bit more of a defensive sector, only up about 1.1%. Then you have New York Stock Exchange. In here you have Dow Jones, which again, Apple and some drama happening there, and he wasn't able to rally that much. And then you have S&P 500 and then Russell 1000. So the riskiest part of the markets were actually kind of booming today. Just wanted to kind of put that out there, and then also wanted for you guys to take a look at this analysis here. Looking at the main markets kind of comparison. And here you have SPY up at the top. You got Dow Jones. You got 1Q, which is the Nasdaq, not the Nasdaq 100. Is the complete Nasdaq in here. And then you're looking at IWM, and you could see up at the top here, right, as the tops were forming, there was divergences in the market between what the Russell was doing, what the small caps, what the Nasdaq was doing, what the S&P, and you could start to kind of get clues of a possible market sell-off. And that's why I kind of monitoring here to see if there's anything interesting. But the only ones that have made a new low below June lows was, I think on the closest basis, was S&P 500 and Dow Jones. The Nasdaq and Russell did not. So just kind of watching for those discrepancies. We're still obviously in a pretty big downtrend in here. This little blip of a rally doesn't mean a whole lot. We'll see if it's gonna, continue to be aggressive. But with a lot of stocks being, I put a chart on Twitter this morning. Only 3% of the stocks in the S&P 500 were above their 50-day moving average. So that's how beat down you are. And, I'm not even going to talk about the 200-day moving average because, we have a lot to go until we're going to reach those levels. So, I would obviously watch some of the key swings highs for confirmations, and then, we'll see from there. But, today's rally, it's a little green shoot. It might not mean a whole lot. We'll continue to kind of watch this as we go forward. And then one thing that I've showed members yesterday was the bullish percent index. It's a breadth indicator that I watch, and it's pretty darn accurate a lot of times in here. And you could see we've had it back at the low in the June. It was at about 11. We had a double test of that level again, and usually leads to pretty strong rallies once these sub 30 levels kind of get hit in here of at least a few percentage higher at least. So we'll see. Usually you want to stay long if this bullish percent index it's above 50, and you kind of have to think about oversold conditions when it's below 30, but it usually favors the bears when it's below 50 as well. So above 50, you're pretty bullish. You could see you can look back in here how it's nicely staying up there, and then once you kind of start to break below those levels, then you start to be more in a bearish market, and you have these oversold conditions that kind of gets sold into. But then when you come on the bearish side, it starts to respond one more time. So I'm watching that. And then again, something that you're familiar with when you watch my macro cafe on Saturdays, that the S&P 500 here with the price and a little bit of a divergence that I've been watching for a while between XLY and XLP, and this is between discretionary and stable. So both are consumers. One of them is discretion, one of them is staples, one of them is excitement and spending money. The other one, it's safety and necessities. And this ratio continues to push higher with a stock market that wants to push lower, which means that underneath this market there is a little bit of strength and people are piling up into these more riskiest sectors of the market. So keep an eye on that. I just want to quickly touch on the 10-year yields and on the inverted yield curve here at minus. We used to go, we were as low as minus 50 basis points, lows that haven't been seen since 2000. And then you could see, obviously, every single period, you already saw this chart many times, every single period of inversion was pretty much followed by a recession. Now, actually we've gotten a much larger recession with a less of a yield curve inversion and much thinner recession with a deeper yield inversion. So, we'll see. Who knows what the next one is going to be, but, if you were to look about all these periods, it's very likely that we're probably going to get something, who knows, 6 to 12 to maybe 18 months down the road. I'm not sure, but definitely something to watch. And the way you would play a reversal from inversion of the yield curve. So, this is a yield curve inversion. And then if you're looking for a steepening of the yield curve, right, which would look something like this, you start to move to the upside, right? Then you want, obviously, the lower the shorter end of the yield curve, and you're looking at the 2-year, to rise faster than the long end of the curve, which is the 30s. So usually, the way I kind of do it in my platform is by using futures, and you can basically sell. You can actually basically buy 2-year yields, 2-year notes. So you buy 2 of those, and then you sell the 10s. Right, so you buy 2 on the 2s, you sell 110, and now you're skewed to the upside, and you are favoring, you're playing basically for a reversal of this yield curve to the upside, and that, might take, I don't know, a year, 6 months, 2 years, whatever, and you can stay and continue to play that and let that kind of run. But that's kind of how you do it. You buy 2 2 years, and you sell 110, and that positions you for a yield curve steepening in there. Okay, let's continue to go. I wanted to show you a little bit what happened in the dollar today. Look at this guy, right? And it came on a pretty high volume. This is something that I use on the kind of candle volume. You can see usually the candlesticks are getting fatter and thicker when you get volume to the upside or to the downside. And we've gotten a I would say a pretty serious volume for today in terms of beginning of some kind of a sell-off, and it's the first such instance where the dollar is actually so aggressive to the downside. So I think that this could be the beginning of a much larger correction. We're going to take a look at Dixie in here, but it's probably going to continue to push lower towards 29 and eventually maybe 28 and maybe even lower. What you want to do is you want to put a trend line in here, and the moment you start to attack it, a little bit of a reaction, and if we break below it, then we know that the dollar is cooked for a while. But I continue to stress the fact that I think the dollar it's reaching a very important top here very shortly, if it's not already found back in there. Let's see if I have one more chart for you. Yeah, if you do want to get long, if you do want to get short dollars, and if you want to use ETFs, let's say you don't necessarily want to short UUP, right? You want to buy something to be on the long side. This is a ETF that does it, and it's not a double ETF, it's not a triple, it's not nothing like that. It's called UDN. It's by Invesco, US Dollar Index Bearish Fund, and what you want to see, if you buy this guy, right, then this one moves higher. Now, I don't use it. I usually use futures. I go long via euro and all of that. You can use that as well, obviously. But if you want it to be via an ETF, this is the one to use if you're bearish dollars. And there could be a pretty decent rally coming. Nothing. We're looking at the monthly time frames. Let's switch over to a daily. See if I can see anything. Well, that's too much. Let's see daily price volume. So you can see the volume in here with a pretty nice candle. And then let's take a look at this guy. Similar story, but we've been in a pretty big downtrend in here. So, how much can you really trust this move? Maybe you want to wait until you actually see a 5-wave move up out of here in terms of Elliott wave structure, get back above some of these moving averages, and then initiate position. So I think there's plenty of time in here. If the dollar has really reached an important top, there will be a lot of time to kind of get bearish on it. So let me quickly show you a couple of charts and counts in here, because that's why you're here. I wanted to see if there's anything on the futures that I wanted to talk about. Let's take a quick look at gold. Where are you? G4/GC. You know, very nice rally in gold. So it's just a similar story, because we dropped so much in yields. You could see the gold kind of rallying. I want to show you the daily time frames in here. Let me go to a weekly. Right there. So you know, you kind of have this double bottom formation, then you broke lower. Could it still be a running flat? I mean, you know, you have a 3 wave in here, you could have a 3 waves, 3 and the problem is right here, 1 2, and then it's very hard to kind of find a full impulsive structure here. So you can go 1 2 3 4 5 and you would have been perfect, but you've made another rally and another low. So that kind of throws a little bit of cold water on, you know, on the flat scenario. So remains to be seen. I'm not super excited about gold, but if you know, if we're getting quantitative easing in any way, or the Fed kind of slows down, you know, there could be further upside in here. But I would not, you know, trust it much above 1750. Let's say that would be probably a level that is going to get a lot of supply in there. And then, you know, a little bit of a rally in oil as well. So if we go to a 4-hour chart, you could see in here how we're going back. We're still in a downtrend. We're fighting some declining moving averages. You know, I'm not super sure that this is the beginning of something in oil. So, you know, I don't like commodities. I think if the inflation comes down, commodities are going to get killed. And, you know, oil is kind of part of it. Natural gas and corn and, you know, lumber already came down and a lot of these things. But, hey, you know, if we're starting to think about, you know, central banks doing silly stuff in here, you never know. So I talked about bonds in here. So here's the 30, you know, kind of the largest rally we've seen in a long time, because the 30-year bonds were in a big downtrend. I mean, since the latest correction back in the beginning of August, right? Then we went up to 145, and then it's been just a, you know, pure dirty downtrend to extreme levels in, you know, and you're back at 124 here. So, you know, a nice, more than almost a 2% rally in bonds, which is kind of rare. And I want to show you kind of how the 2-year looks, and this is the one that kind of relaxed the markets. This is kind of what the Fed watches, and you're looking at I mean, look at this thing, you know, on the weekly time frames. How sustainable this can still be. And I've showed that chart on the opposite versus the yields, right, on Twitter as well, above 4 on the 2 years, right? So that's kind of crazy, and that's kind of, you know, this is kind of what can create big dislocations in the markets. Here is the RSI kind of diverging. You know, don't know how much to really trust it just yet, but it's a little bit of a sign that things could slow down for a while on, you know, on the bond market as well. And then we haven't had much from the yen. This was the intervention of the Bank of Japan. So that was the first signal that actually nobody really cares about Bank of Japan right now, because, you know, they're on a different path. They're not even raising interest rates. They're doing nothing. So basically they're just trying to defend, you know, the slaughter that happened in Japanese yen. And we're still kind of sitting here because they tried to intervene, and then the markets kind of went back lower. This is how the yen looks on the monthly. I'll look at that, right? So, you know, there might be some slowing down, but, you know, I really don't trust this market just yet that much. And then, you know, that's pretty much in here. Bitcoin did, you know, bounce from 18.6, you know, towards the trend line. These are the futures on the daily. On the 4-hour, you could see a little bit of a reversal. Let's see if we can climb back above the 20. And that's what I'm going to say. I'm going to talk about the counts and the other stuff in the video. So quickly on the S&P 500, while we bounced from 200-week moving average, we made a, you know, just a marginal new low in here. And I have a couple of accounts. I was talking to the members with you guys last night in here. You know, the possibility of this, right, as we were breaking below 36.24, and see if this is going to turn up into a 1-2-1-2 with a 3-4 and 5-4 and 5 for the wave A, followed by a B and a C. I was talking about how unlikely, I mean, you know, how beautiful this pattern looks, this correction will look, but kind of how disproportionate this Z wave would kind of look in comparison with the W and a Y, and then how this actually could be the entirety of the Z wave. So you can actually move this in here, you can have an ABC and actually be done with it, right? You made a marginal new low, you did your thing, right? So you have a WX, YX, ABC instead of a 1-2, and then be done and then start to move to the upside. Well, I'm not, let's say, super convinced that that's the that that's the case. I wanted to see more from this market. Obviously, we got moving averages, we've got prior swing highs, we got trend lines, we got a lot of stuff before you can really say and embark that a new bull market is starting. So, this will remain here in my outlook, even though, I'm not too happy with the profile and kind of the way this would unfold, kind of moving lower. The other one that I was talking to the guys about was, okay, and you might even remember if you watch some of my previous videos, I've had this X wave back here, right, to a WXYX, and then, no, actually I've had it, I'm sorry, the other way. It was next wave, but this B wave was a little bit higher back here, right? No, I'm going to retrace that. What I've had a WXY for a wave X instead of an ABC, right? So I've had an ABC for a W, I had an X, and then I was thinking maybe there's a Y wave coming. Well, we made a new low, and since you make a new low, for me, it's kind of, I don't really usually like to put X waves at new lows. I go with the B wave and I'm thinking flats. So then I go 3 waves in here. So ABC for a wave A, ABC for a wave B, and then maybe a flat in C, which can complete another X. This could also become a running triangle if you really want to, and the way that will look would be like an A, B, C, D, and E, right? And you can still have some kind of an X wave in here like that. So you have a W, X, Y, X, and then A, B, C for a wave Z, right? So kind of a similar story, but a little bit better proportion, because what would happen, what creates proportion? This X wave. This X wave actually in a triangle creates proportion and makes the markets look nicer between a WXY and a Z wave. So, just kind of a couple of ways to kind of think about it from the perspective of the right look into the market. So who knows if this is going to pan out or not? It's something that I'm definitely watching. And, again, it's all a matter of kind of, what does this mean for you? How are you trading this market? When are you right? When are you wrong? And what are the levels that you're watching to kind of tell you that different story? If you're watching swing highs, if you're watching moving averages, what are you doing here? If you're long, what is your stop? And kind of what are you risking? What are you looking for? And all those questions that come when you're actually putting the money behind Elliott wave and behind structures. So that's kind of what I'm watching there. So again, this is, just the 200-week moving average, and looking at the daily, right, we wanted to see it climb back above 20. I mean, to kind of gain upside momentum, you have to be back above that to continue to rally. And then the 50-day is kind of flat. So maybe that's what's going on. Maybe we have a big old triangle that's going to be in the middle. But, we have a lot of upside to go. And right now we're kind of trapped between the 200-week and 200-day in terms of kind of price structure. This is something that you're familiar with already with the percent corrections. In here, 24, I think we have gotten maybe a little bit more with this latest dip, but it's something that we're watching as a normal correction process within a secular bull market. In here, you have this kind of cyclical correction, cyclical bear market. So we'll see if this was the end of it, or if it really wants to get back towards the bottom of the channel in here, right, through those structures that I've just showed you. And this is let's see, was this a different scenario? Yes, WXYX and an ABC for a Z, and this would mean that you're actually kind of getting ready to pound it to the upside. If you want to stay a little bit safer, right, you want to wait until at least you get back above this B wave, if not above this X wave, and that would be more of a kind of a green signal that we're actually about to rally much higher. I'm not going to take, there's a lot of stuff here that I talked to the members about too. You can look at ARK ETF, and this is some of the macro watch I kind of follow as well, along with the yields, with the bonds, with the sectors, what's going on within them, and a lot of ETFs. You can see GDX, pretty aggressive XOP today, and which of the kind of industry ETFs were performing today and which ones were much weaker, right? So you can look at SMH, right, the semiconductor ETF, which is only up about 1.6, and then you could see in here Apple was down 1.5%, and then Google 2.5 to the upside. And with that, I'm gonna let you go. Thanks everybody for watching. Don't forget to visit me on Twitter, and then also to subscribe to this channel. And if you feel like give me a thumbs up, go ahead and do it. Leave me a comment. Check the program out. It's awesome in there. I reopened the monthly subscription. It's pretty affordable if you guys want to check it out and trade with me. I do these videos every single day. I'm doing next Bitcoin, and then we have a chat room with lots of interactions and interesting stuff in there. You can use that to your benefit. So I appreciate you all being here. I'll be talking to you a little bit later. Thank you. Bye bye.